Today, Applied Digital, ticker APLD, surged over 50%. That's not a typo. This is one of the biggest single-day moves we've seen in the AI infrastructure space in months. So, what's going on here? Did the company cure cancer? Release earnings that blew expectations out of the water? Not exactly. What they did do was sign a $7 billion lease agreement with CoreWeave, one of the biggest names in AI infrastructure, to host 250 megawatts of AI compute capacity in North Dakota. And there's an option on the table for another 150 megawatts. It's a 15-year deal. Long, committed capital, the kind of thing Wall Street loves. But let's break this down like long-term investors. This deal isn't just big in dollar terms, it's big in what it signals. Applied Digital isn't your typical data center operator. They've pivoted sharply over the last year, away from crypto mining and towards something more durable, high-performance computing and AI workloads. This move with CoreWeave is validation of that pivot. It says, we have the infrastructure, we have demand, and we're not just talking about AI, we're enabling it. If you believe that AI infrastructure is the new digital oil field, Applied Digital just signed a long-term drilling contract. Now here's where it gets more interesting. This wasn't an isolated announcement. On top of the CoreWeave deal, we found out that Macquarie Asset Management, one of the more conservative, long-horizon players in the space, is investing $5 billion into Applied Digital's HPC business for a 15% stake. That's serious, vetted, institutional capital. And then you've got Sumitomo Mitsui, one of Japan's largest banks, arranging a $375 million credit facility to help build it all out. You don't get this kind of support if your business model doesn't make sense. The big players see the future, and they're writing checks. But we can't talk about this surge without acknowledging the mechanics underneath it. APLD had 35% short interest. That's very high, borderline squeeze territory. With today's news, shorts got caught off guard. Some were forced to buy back shares to cover their losses, pushing the price up further. Combine that with social media buzz, several hinting at a gamma squeeze, options traders piling in, and analysts reiterating strong buy ratings, and you've got fuel for a rocket. This wasn't just a good story. It became the story for traders today. So the question a lot of retail investors are asking now is, did I miss it? Is APLD still a buy at this price? Let's think through it like rational allocators of capital. On the bull side, you've got $7 billion in locked-in revenue over 15 years. You have backing from NVIDIA, an early investor in APLD's HPC division. You have deep-pocketed institutions buying in. The AI data center market is growing fast, and demand for compute is insatiable. This is a story that makes sense. But here's what gives me pause. The company is still not profitable. Q3 2025 earnings missed estimates by a wide margin, $52 million versus $63 million expected. They're talking about an at-the-market $200 million stock offering, code for dilution risk. There's $150 million in convertible preferred stock sitting on the balance sheet. Price to sales is now over 10. That's rich for an infrastructure play. So the real question is not whether APLD is a good business. They're building something with long-term potential. The real question is, has the price gotten ahead of the fundamentals? Personally, I look at a day like today the way I look at an earnings beat, a confirmation event. It tells me the company is executing, that the market is starting to notice, and that the narrative is shifting. But I don't rush in when stocks are euphoric. Instead, I wait for the second chance, because markets get excited, prices overshoot, then they settle. And when that happens, I want to be the one who's done the work, understands the business, and knows exactly what I'm buying and why. If APLD pulls back, maybe 15%, maybe 25%, and the thesis hasn't changed, that's when I'll start seriously building a position. Applied Digital proved that it can land real enterprise clients in AI, that big institutions are willing to back them, and that the pivot away from crypto wasn't just a marketing move, it was a strategic reinvention. But with big moves come big expectations. APLD has a lot to prove in the next few quarters. If they hit their build-out targets, get those megawatts online, and start turning these contracts into operating cash flow, This could be a very different company a year from now. But remember, speculation and investment aren't the same thing. Don't confuse price action for progress. Buy great companies at fair prices and be patient while they do the work. That's the mindset. And right now, Applied Digital is starting to do the work. Let's see if they can keep it up. So that's where things stand with Applied Digital after today's massive move. A $7 billion deal, heavyweight institutional backing, and mounting AI demand are all pointing in the right direction. But with that kind of rally comes the need for clear-headed thinking. Is this the beginning of a long-term revaluation or just a short-term squeeze? That's the question investors have to answer for themselves. As always, I'm not here to tell you what to buy. I'm here to walk through the facts so you can make better decisions. If you enjoyed this breakdown, hit the like button, subscribe for more updates like this, and let me know in the comments. Are you buying APLD here, or are you waiting for the dust to settle? Thanks for watching, and I'll see you in the next one.